Hey guys, this is Dylan. This is going to be the first piece of a little educational series that we're going to be doing on our YouTube channel. Most of the time they're just going to be little short videos. And the goal here is to try to get everybody a little bit more knowledgeable and a little bit better at trading each video you watch. So first up is going to be probably an indicator that most of us that have been trading for a while probably started out. That was probably our first indicator, and that's the relative strength index. You might have heard it called the RSI. And the RSI is a momentum indicator. Mostly technical traders use it. It's displayed as a line graph oscillator at the bottom of your chart most of the time. It'll basically tell you when a stock or other asset, crypto, Forex, whatever it may be that you're trading, is getting overbought or overvalued, or oversold and undervalued. So let's go over the main kind of way everybody uses the RSI. We won't go into RSI divergences or anything in this video. This is just going to be the very basic RSI indicator. You can see here is our RSI down here at the bottom of the chart. You see that it stops here at 70 and it stops here at 30. These are always the default settings. In my opinion, I think it's best to leave it how it is default, because you want to see, again, we've said this a million times, is you want to see what everybody else is seeing. So if you go start changing these lines around and messing with the indicators, well, now you're going to be seeing something totally different than the majority of everybody else, and you're kind of off in the field somewhere trading by yourself almost, and you're not seeing the same things that everybody else is seeing. So when somebody sees it's getting oversold here, we might want to start buying it. You're not going to see that because you went around and messed with your indicator like Dylan told you not to do. So let's not do that. I like to, a lot of times on my indicators that are similar to this, I'll take the rectangle box here and I'll put it up here at the area of to where it's getting overbought, where it's getting overextended or overvalued. And, at that point, this is where we're looking for sells, is when the RSI line gets up to this area of 70. And then down here, I'll put another box just so it's really easy and fast to see, hey, what am I looking for if the line's down here? What am I looking for if the line is up here? But same thing, when it gets down here, it makes it to where your eyes automatically know, hey, down here I'm looking for buys, up here I'm looking for sells. And that's why this video is going to be pretty short, because I basically just explained the RSI indicator to you. So let me put some text on the chart here to help us out. So for sells, we're looking for the RSI to come up towards the 70 area. Not every time is it going to reach 70, and not every time is it going to go over 70. See, kind of like right in here, it didn't quite reach 70, but it's still, we popped a bear signal on vision and it had a great sell. And then down here, when it gets around, near, or under 30 on the RSI scale, it's oversold, it's undervalued, and this is where we're looking for buy opportunities. Again, this is not something that you want to just go off of 100%. This is the reason why you're buying and selling, because a lot of times this will be considered divergence, but you'll see the RSI coming down, but the price still going up. So you want to be careful with just trying to use the RSI as your only kind of confirmation indicator of why you're entering and exiting positions. But it can really be it's one of the most powerful indicators to use in conjunction with some other stuff of why you're taking entries, why you're taking exits or sells, or long positions. So we'll go over the chart here with vision signals and see where and what signals you would have went in on based on just vision and the RSI. So RSI down here on the left side of the chart, you can see very, very oversold. 11 RSI, that's very low for anything. And then we get a beautiful bull signal here, and we had a very great run. Getting a little overbought here, or overvalued. It's coming into our red zone. And now vision didn't pop a signal here, but it did say take profit. And you can see if you would have gotten in with that, it would have been a profitable sell position. But again, you want to look into some other stuff before you just jump in based on the RSI alone. It kept moving up. There were still some buyers in here apparently, and vision finally said to sell it up here, and we got a very good sell here on this bear signal. Now, if we look at where this bear signal popped up, the RSI had just been for a good amount of time in the overbought, overvalued zone. Once you see this, now we're looking for a bear signal from vision. That's what we're doing. We're waiting for the RSI to reach one of these zones or close to it, and then we're waiting for that bull signal or bear signal to pop up from vision, confirming our thoughts, whether it be a long position or a short position. Again, RSI came down. This is one of those spots I was talking about where it doesn't have to come overextended into one of your zones, this is still considered oversold or undervalued because it is very low on the RSI scale. So, and then we look for that. We see that. We're starting to look for long positions. And again, Vision popped a nice bull signal here. And, you know, there's plenty of room to make some profit in there. Plenty of room. RSI didn't, again, quite come up to our red zone here where it was overextended. But again, it is getting into the overbought territory. Vision popped a bear signal there. And plenty of room to make some profit there. And we can go over this over and over again, but I think you guys probably get the point now. RSI in the mud down here in the oversold area. We're waiting for a bull signal. As it comes up, then we're going to be waiting for a bear signal. As it dips back down, we're looking for a bull signal. You know, when the RSI is down here, you're not really wanting to look for sells. And when the RSI is up here, you're not really wanting to look for long positions. So keep that in mind. Basically, you know, if the RSI is high, don't go long on something. Just be very cautious, you know, before you go long on something. And, you know, if the RSI is down here, I would be very cautious to take a short position on something. Again, none of this is advice, of course. You know, no financial advice ever given, ever. So I hope you found this video very helpful. In the comments, leave us some suggestions for our next videos coming up. Don't forget to join our Discord. The link will be in the description here. Of course, like the video. I mean, come on.